if you can earn 80 quid an hour doing something, you want to go out there and earn your 80 quid an hour, and anything less than that. So if someone will do your bookkeeping for 50 quid an hour, 60 quid an hour, you want to be paying them to do that, and you want to be doing where you can make more of a return.
Yeah. Most business owners don't have a numbers problem. They've got a visibility problem. They're busy. The bank balance looks all right. Their accountant's doing the year end, but they still don't know exactly what's making them money, what's bleeding them dry, or whether they can afford the next hire. So today's guest is Matt Priest. He's the partner at Forrester Boyd and someone who is pushing hard on the message that I agree with. Bookkeeping is not enough. Matt's all about building better systems, automating the boring stuff, and helping directors stop using finance as a rear view mirror and starting using it as a decision engine. Matt, welcome to the Director First podcast. How was that for an intro?
Brilliant, that one, mate. Yeah, absolutely perfect.
Listen, first question, right? Obviously, I'm a mad stalker on LinkedIn. When someone says that they want to come and they'll let me interview them. You have said things around getting real satisfaction from aligning a business owner's personal goals with the business goals. Okay. Yes, we want to make some profit, but we also want some sort of work-life balance and the tax planning that sits underneath all these strategies. Anyway, here's the question, right? What's the most common life goal you hear from directors that their current numbers and systems make basically impossible? What do you do to change it, to make it a reality?
I think, do you know what? In a lot of cases, the numbers don't make what they want to do impossible. And if I explain that, most conversations I had with business owners is they want to do less. They're too involved in the business. They're too involved, especially when it comes to the finance for this sort of smaller owner managed business. They're the one who deals with the finance, yet they're trying to run a team of people. They're trying to do the marketing. They're trying to get new work in. They're trying to do everything. So a lot of times,
sounds familiar.
There isn't actually a problem with the numbers. It's a case of that they're doing too much and they want to take a step back from certain areas. And a lot of times where we can help with that is on streamlining the financials. You know, they'll be doing stuff in a way in their system, or they've maybe got an old system, which is quite manual. They're doing stuff themselves manually, or they've got a better system, but they're not taking advantage of what it can actually do. So we can start off by stripping out a lot of their time by automating systems or helping them with everything being cloud-based. It's like, okay, you like to do these bits to the owner, you do these bits, and we'll do all the boring stuff. Or have you got someone in your team, someone admin-based, who you can perhaps shuffle what they're doing around a bit to free them up to do something, to do some other more, let's say, manual stuff on the numbers, any inputting and stuff like that. So that's a lot of times where the conversation goes. So it's not that the numbers are impossible. The numbers are actually okay, but the owner is just doing too much and they're wanting to just have a bit more time for themselves or to look at things in the business a bit more strategically. So to have that headspace, whereas they're not in the business constantly, you know, they're always, I suppose, firefighting stuff. You're more proactive, you're on top of things, you've got that space to think and push the business in the right direction, really.
Have you had a camera in my office this week? Because you know what, I've one of those weeks, you know, like where I want to do a little bit of planning. We're like in a fairly big, we've got 2 offices, but we're all open, and it has just been one of those weeks where it's constant, like things that are happening, things that are moving. And like yesterday, honestly, I went home, got 3 kids on iPads, all different iPads doing all like different things. The phone is still going, and I literally felt like my head was going to explode yesterday tea time. And it's because I'm getting dragged into stuff that everyone's fine. everyone's fine. They all sort it out. But I've got a tendency to want, and if you're in an open plan office and you can hear something, and you just hear, and you're like, what's gone on there? Blah blah. Blah. And yeah, it's so I get it, mate. Listen, I learn from these so much because I feel a lot of people are talking to me. I'm that business owner that can. I think I know what I should be doing, but
I think it's so difficult to let go of certain things in it and to not be involved because it's your business at the end of the day. If you've spent a lot of time building something and creating something, it's like you want to know everything what's going on, but at the same time, a lot of the times you can't. It's taking too much of your time, and you've got to just let people do it without knowing what's going on. To a degree, obviously, there's things you do need to be aware of, but you've got to take that step back.
Yeah, no, you can get away with it when you're doing smaller amounts. But look, I suppose one of my questions for later is like, go on. But I mean, we've gone well off piste already on this. We're not 5 minutes in. At what point should you be looking at outsourcing? Like, if we're speaking to a director who's watching or listening to this, at what level of revenue should you be going, right, you need someone now?
I don't think it comes down to a level of revenue as such. I think it comes down to putting a value on your time as the director and how valuable your time is. And as soon as that time is worth more than you can pay someone to do something, then that's when you want to start outsourcing, really. I always say to people, and this is more for like tradesmen, really, if you can earn 80 quid an hour doing something, you want to go out there and earn your 80 quid an hour, and anything less than that. So if someone will do your bookkeeping for 50 quid an hour, 60 quid an hour, you want to be paying them to do that, and you want to be doing where you can make more of a return. Yeah. The other thing to that is as well is from a mental point of view, you want to do stuff that you actually want to do. So I know a lot of business owners who don't like the finance side. So what often happens is they will just leave it and leave it, make it worse. So when they eventually come to it because they have to, because it's a day away from the VAT return deadline or whatever, it's so much time and effort for them. And you can only imagine. Maybe it is, maybe it isn't. But I would say it's got to be on your mind all the time. And you're thinking, I've got my VAT to do. I'll do it tomorrow. And it's just eating up that energy as well, in it, in that headspace.
I obviously I speak to directors day in, day out who are in that position that they've just rabbit in the headlights, buried the head in the sand, and obviously I understand. I really understand that. I'm open with people. I have never, not always been as on the ball with that stuff. I remember years and years ago when I was doing everything, and you've spent the VAT because you've had a lean month, and I'll sort that out, and I remember a bit like lying in bed at night. That's when the problems will hit with me. I'll be in bed, I'm ready to fall asleep, and it's like somebody turns just lets a pinball go off in my head, and then bang, 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 and so I get it. And for me, it was lack of education. I just didn't. I was no good at time management. I didn't really understand the finance side of things, which is crazy considering what we do. It was very much, well, we got this much coming in, our costs are about that. We're absolutely fine. It was only when, and that is one of the things that jumped out to us about you, because you sort of really make it clear the difference between, your very bog standard compliance accounting and that sort of fractional FD, that really more of a financial partner, isn't it?
I would say we want to be that trusted advisor. I know that a lot of people run a business. It can be a lonely place, can't it? And you haven't got people to turn to. Businesses don't have the bank managers anymore who used to provide a bit of that support and guidance. And now there's not many people for them. So, and the financial side is such a big part to the business, and we speak to clients regularly. We have that relationship with them, and like I said, sometimes we're the only person they have. So I always say to people, look, whatever it is, give us a call. We've been, I've been doing this 20 years.
How
We've
old,
seen it.
how old were you when you started? 11?
18 when I started. So I've been doing this 22 years.
Wow. How did you get into it then?
I got into it by a bit of a fluke, if you can class it as a fluke, being an accountant. I don't know. I got into it because I was about to leave college at 18 and didn't really know what I wanted to do, to be honest. My plan was to take a year out and save a bit of money and then go to university, but I hadn't really looked at any universities and done anything like that. So on this year out, if you like, before that came, I thought I actually do need a job to earn some money. And I saw the advert at Forrester Boyd, which is where I am now and been all since then, looking for a trainee accountant. And I'd always had it put to me that you're good at maths, you should be an accountant. Not really knowing what an accountant is, to be fair, as I'm going through school. The college didn't offer an accountancy A-level or anything like that. But it was always there in my mind that people saying you should be an accountant, you're good at maths. So I saw the advert and thought, well, I'll apply for that. I need something to do for 12 months. And I think I was pretty lucky to get the job. I didn't really like prepare for the interview or anything like that. Got the job, and then sort of 6 months into it, I passed an exam, and I didn't find it too bad at that point. It's a bit sort of boring as you train and you're not knowing what you're doing, but I thought, I actually find this all right and I can see myself doing it. And I'm 6 months in now, and it took sort of 4.5 years to be qualified. And I thought, well, another 4 years and I'm qualified. I've got a qualification that I can use for life. I don't need to go off to university or anything like that. And like I enjoy. Look, I suppose what helped me, a lot of my friends stayed local as well. So you'd work at the week, you'd be out at the weekends, you'd have a little bit of money for a lad's holiday every year and stuff like that. So I was enjoying it, and I thought I'll stick it out and get the qualification, and then see what happens. And then when I fully qualified, that's when I thought, actually, I do like what I do. So I probably need to, make it work and put that effort in. Not that I wasn't trying before, but
no, I get it. Yeah, I've got a sort of similar, similar way I end up here. I never planned on it, and then after a while, I'm thinking, actually, we've got some here. This is good. I enjoy doing it because, like, they're not. I mean, I think they're an award-winning firm, aren't they? Forrester Boyd, mid-tier.
Yeah. So we won we won the mid-tier firm of the year. Let me get this right at the Yorkshire Accountancy Awards.
The other side of the hills.
And then we was put forward for the sort of a different set of awards, the National Accountancy Awards, and I think we was classed as large in them awards, and we ended up. It was either third or sorry, Chris. There's someone at the door. I don't know if you can pause this.
No, can't hear it.
Podcast.
Listen, I can pause it if you want to go.
We classed as large in the national awards, which we got bronze. I think it was bronze because we was announced as bronze on the night, and then we was shown to be silver. But I think it was confirmed we was bronze. But heck of an achievement, to be fair. Something we're all proud of. So we're a decent
heck of a night if you wasn't sure whether we were bronze or silver.
Well, there was that as well. No, we was announced as bronze, and then we saw on some like social media stuff afterwards that we was second. So we had to like sort of confirm. I think it's confirmed that we're bronze. But yeah, really, real good achievement for us, to be fair. So we are a decent sized firm. We've got offices across Lincolnshire and in Leeds. Just opened a Leeds office April last year now, and that's already grown to quite a few members of staff.
And it's very rare, because I speak to loads of accountants, mates who are accountants. Very rare for somebody to sort of get qualified and work the way up in one firm, isn't it? Because normally people get qualified, they'll be getting, DMs on LinkedIn. We've got this job, we've got that job,
Yeah, I suppose our firm has got a good track record of it. So I think, and I don't know pretty much all of the partners, bar one or two, studied and qualified with the firm and have stayed throughout. So we have got a real track record of that happening. I think what helped me was I did go through that spell when I qualified and sort of had a few interviews elsewhere. I did like the firm, I liked the people I was at, but I was also in two minds whether to join what we call industry, so be an in-house accountant for someone else. And that's what a lot of people left to do because there was more money in it after you qualified, really. So you could get quite a decent pay rise working in industry. So I had a few interviews, but I spoke to my boss who I suppose gave me some decent advice, and I said, like, look, I don't know, maybe trying to get a pay rise out of him a bit, but I just sort of said, look, I'm not sure what to do. I was offered a job, I think, and I said, to be honest, I'm not sure I want to take it. I quite like it here doing what I do, but it's more money. And just had an honest conversation with him, and he just said, like, look, doing what you like to do is more important than anything. So if you like what you're doing, if you like being an accountant in practice, then locally you're probably at the best firm for it. I was a 5-minute commute from my house in the car, so it's like, yeah, it's a good point, really, and took that on board and thought I am in the best place where there's probably the most opportunity, so I need to kick on and make it happen, really.
Like the sort of the journey, if you will, from trainee getting qualified. I think when I looked up, you guys have got like a virtual FD sort of CFO offering within the business. There's quite a that's quite a journey, because most firms don't offer that, do they? It's very much your year-end stuff. Come and see us once a year. Give us your books. Blah 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 blah. Because I speak to these types of directors all the time. They'll call me. They've got some issues going on. I'm like, okay, can I have a look at some management information? And they send me their accounts.
Yeah.
We're 18 months old. I'm like, okay, so
where's the management information?
They go, no, that's it. And we're talking businesses that really should have a finance team. So for people that aren't, are favourable what we're talking about now, can you sort of tell us what that difference is between that year-end compliance stuff to what you're pushing and what you're saying? And I'm agreeing with you, is really important to run a business.
Yeah, I suppose there's two things with it. One is what you've mentioned there, which is the regular management information and them sort of financials. The other thing, which I'll just bring up first, though, is because of a conversation I had yesterday with a potential new client. So he'd been introduced to me by an existing client, and he was, as you said, he was getting information every year. It was sort of 6 months out of date. He had a trading company and a property company, and he just sort of said, the person, the existing client, said, I need to speak to you, Matt, because I've got quite a bit going on and he thinks I'm not getting the right advice. So when I spoke to him, I didn't offer anything groundbreaking. I just sort of said, look, your trading company, it built up a lot of cash, and he was reaching an age of retirement. And I said, look, you may have an issue with that company is becoming an investment company because of all of the cash you've got into it, which is going to impact your business property relief if you were to die now. But also, if you just close the company down and get the cash out, you might not be entitled to your business asset disposal relief. I said you've got some issues there, and I spoke to him about a few bits like that, and he said to me, Matt, what sort of accountant are you? Because you're telling me stuff that I've never heard about before. And I said, look, I'm just a general accountant. I'm nothing special. But what you will find is there's a broad range of accountants, and some are just compliance who will just process what's in front of them and submit a set of accounts and do the compliance, which works for some businesses, as its place. But there's also accountants which are more like us who will look at things, the overall picture of the client. I mean, this guy was coming to retirement, so we needed to look at potentially getting his money out of the company. He had a pension that he might want to spend first. I said there's a lot to look at, and you need some tax advice and probably some financial advice as well. So there are differences in accountants that probably people aren't aware of, to be quite honest. And to bring you to the question you actually asked me, rather than that one I've just answered myself, it's all the systems now, right? When I first started, it did take a long time to get some figures. There was a lot of manual entry. Even if we were to do management accounts for a client, there might be a month or 6 weeks after the month end for getting the figures, just because you had to wait for invoices to come in. A lot of stuff would be paper. You'd be putting everything together. You'd have to type it and enter it onto the system to get it onto the system to record it all. So stuff did take time, but now that time is no longer there. The way the software has developed, you're scanning a load of invoices and it's there in your software. There's a bank feed that's coming in every day. So you can close off your month end pretty quickly. Granted, there are the occasional, you might have to wait on some invoices from suppliers, so it might be a week or so before you can close off, but you can close off the month end pretty quickly. And then as long as everything's in that system, the management information should be a click of a button, really, or a few bits of checking, reconciling, and the click of a button. So you can get the information you want really quickly, and you can look at how the month is done 7 to 10 days after month end and have a look at where you need to put your focus. I had a chat with a client before Christmas, because he was saying he was making a lot of money, and I said, I don't think that's that's not stacking up to your financials, basically. So I said, we need to dig into it and have a look at, when you're telling me you're making money and you're saying you're making 60 grand out of this job, we need to actually look at that, because are you actually making 60 grand on that job? Probably not, when you factor in everything and there's hidden costs that you're missing because your bottom line isn't agreeing with what you're telling me. Groundworks. So he's a relatively new client to us, so it's like they're the types of things to look at and to get right and to get the right information on, and to keep a continual process of monitoring that. To me, directors' time should now come away from where they used to be involved in sort of putting the financials together, entering stuff into the system. They should be spending that time on getting the information out of the system and reviewing what's gone on and putting a plan together to do next and what to improve. Yeah.
The reason I asked what sector, because I sort of I don't know, idea it might be construction, is something I see all time and time again.
Yeah.
Someone is taking on work, on the headline figures it looks mega work, and then they can't understand why they're ringing me 6 months later, and it's like, we took this job on that it looked a really good job, and almost, without exception, it's because they don't have the right level of reporting. For instance, they might have a profit and loss, but well, if you're in construction, you should really be running a P&L for each job, shouldn't you, to find
Yeah.
out actually where you're losing money. Sort of brings me on to my next question. I mean, as an absolute basic, I say to people, you've got to have a bookkeeper. You have got to have a decent bookkeeper. But the difference is, you know, what would like an FD, a fractional FD, fractional CFO do on a weekly, monthly basis that the bookkeeper never would?
Well, I think a lot of what you see is cash flow forecasting, really sort of a rolling cash flow forecast, which bookkeepers generally don't do. It's the forecasting, and it's then the comparing. It's budgeting, and it's comparing budgeting to actuals to see what's happened, what's gone missing. It's the sort of KPI analysis, looking at your key performance indicators. In some cases as well, it's identifying the right key performance indicators and identifying the right information to look at. I've got a mild concern going forward with the way the technology is, with the development of AI, that people are going to be drowning in information and then probably end up looking at the wrong thing, to be honest, which is where our guidance might end up being.
Well, what are the key metrics? What are the key metrics that you want to draw a director's attention to on that profit and loss, on that cash flow? Where should they be looking?
Well, the cash flow sort of speaks for itself, and making sure that there's going to be cash there at the end of each week, and make sure they've got the planning it properly, and they've been realistic, because, you know, how often do you see cash flows that it's best case scenario rather than a realistic cash flow? And then it is after that, it's really industry specific on what it is. Like you said, construction, exactly. You would look at each job and delve into how each job is performing, and those poor performing ones, you would look at why, and you'd try and do something about it, or you'd certainly learn from it going forward. Not to, you know, if you've underquoted, what have you missed off? What's crept in that's taken more time or taken more cost than what you expected? And then it's a case of putting something in place to make sure that doesn't happen again. So yes, it's almost always cash flow, KPIs, and then the tax planning as well. So having a rolling figure on what your corporation tax is likely to be, and then pre-year end, normally around the 9 or 10 month mark, having a look at what you do about that. Now, there's no magic wand. You can't just wave away your corporation tax liability, but it's a case of being aware of what that liability is and be aware of what your options are to reduce it. You know, you might not want to take any of them options, because ultimately reducing your corporation tax a lot of time comes down to spending money. So you might sometimes decide, you know, I don't want to spend money on I don't want to buy a new fleet. I'd rather actually just keep me cash and minimize and keep the corporation tax as it is, really. But it's about having them conversations and knowing all the options and making an informed decision.
Oh, I get it. I think, you know, one of the things that I've sort of learned over the years is, and this is it's a good thing. I think a lot of directors get put off with the old finance. They get put off to a point, right? But because when I speak to them, I'm like, I'll speak to businesses that really need an FD, you know, you know, fractional one, but most of the time they don't need a full one. And when I'm like, and I might check in with them a month later, or they'll ring me 6 months later, and I'll go, "Did you follow up on that?" "No, I haven't." And you're digging into it, and it's almost as if that they're scared to let somebody look basically look behind the curtain, you know, you know, there's a lot of fear that are driving people there, until it gets to the point where it gets that painful. Yeah, it's like, and then you do look and you're like, wow, this is a basket case.
Yeah.
And I think it sort of leads on to, I think a lot of directors, they can be scared of you guys. Listen, they're really
Yeah,
scared
yeah,
of us
yeah,
guys.
yeah.
They never want to use us guys, right? But it can be the same for you. We're both there to help them.
Yeah, I get that. Yeah, I'd like to think the perception's changed slightly. I know it's still there. People don't like seeing the accountant, and I don't know what it is really. I can get it if they're expecting a big tax bill, that they won't want to see their accountant and be told what big tax bill they've got to pay. They'd rather, that's not good for anyone, is it? But I think it's as you've said. I think it's probably the fear of the unknown, isn't it? They're comfortable in what they're doing, but actually, I suppose if someone has a deep dive, have they been doing something wrong for a start? And it's a case of, is someone going to bring that to my attention that actually I've been doing something wrong and I've got a lot more tax to pay that I haven't paid, or I've got a lot of I've been putting something down as 0 rated for VAT when I should have been charging VAT on it all the time. I don't know what it is. It's got to be that sort of fear of the unknown, and not understanding probably a lot of time as well, not understanding accounts.
How do you sort of allay a director's fears? You know, because I think, whether you're getting a new client or you're taking someone from somewhere else, what's the first thing you're doing, Matt, to sort of like understand the business? Tell us how you triage a new client.
Good question, I suppose. I mean, I try to put a bit on LinkedIn, as you know, so people can see a bit of personality and can see that, one client came to us, he messaged me on LinkedIn and said, "You seem like an all right guy. Can we have a chat?" And that's sort of music to my ears, really. You seem like an all right guy. That's what you're trying to portray across, that you're not someone big and scary, that people can have an honest, general chat with you. I think there is no hard sell or trick. I think you've just got to be authentic to who you are, aren't you? And hopefully people can see that when I speak to them, that I understand that position that they're in. I'm not going to make them feel like an idiot, and I'm open to whatever they've got to say. I want to know about the business. I do always say, like, the more I know, the better we can advise. As much as we know, so feel free to tell us everything. I think yeah, you just got to be all authentic and just try and.
I think you've hit the nail on the head there. Just be who you are. That'll put some. I know with us, like, we're not everyone's cup of tea.
Yeah.
Because we are who we are. We speak how we speak. We don't spit the Insolvency Act at somebody. It's not very helpful. We're going to say, right,
Yeah.
What's the problem? What's the outcome? These are your options. This is how you get from A to B legally. And some people really like that, and some people don't. And,
Yeah.
You can't change yourself, can you?
No, you can't.
If someone tries to change and be someone they're not, people pick up on it now.
You can see through it, can't you? So you just have to be authentic, and I don't think there shouldn't be a trick to that. Maybe people have tried not to be authentic in the past, but people are just the same, aren't they? At the end of the day, yes, I'm an accountant, but I've just lived the same life as everyone else. I've still got the same mates who I went to school with, the same group of mates who I see regularly. People are as they are, and within that friendship group, some are doing well and some aren't doing as well as others. But everyone still stays the same. You still have the same conversations, same sort of banter that you've been having for 30 years. It's all the same. No one changes. You're just authentic to who you are, really.
One of the things I saw, I don't know how long ago it was, probably before Christmas. You did a video about when good systems become bad systems. Okay. and it made me laugh because I really understand what you're going on about.
Yeah.
What's causing that? Because like people will have a really good system that they have paid. Just tell us a bit more in that video to share for people.
I think there's two things with it, and one is you can have the best system in the world, but if you're not using it right and you're not putting in the right data, it's going to be as useless as any other system, really. So you've got to. I've been speaking to clients about changing systems. A few clients for a while, and at the end of the day, when you're changing the system, it comes down to change management as much as anything. You've got to get people on board with a new system, and got to get people using it right, and certain people leading it from the top to get everyone behind it. So it's a big bit of change management, but you've got to use the system right, otherwise it's not as good as anything. The other sort of point is that back when I first started, there was different accounting systems in place to what there is now, and an accounting system that someone maybe used 20 years ago was maybe a very good system at that time and worked perfectly for them, but now there'll be something better, and if you're still with that old system, it's probably a bad system because there's a quicker and more efficient way of doing things which your competitors might be doing, so you're getting left behind, basically. So you've got to constantly review things. I think the change of technology has been, it's been quick over recent years, and it's only going to get quicker, you can imagine. So you've got to be 5 years ago, we probably wouldn't have been doing this.
No, we'd be going on that long road to Grimsby. I drove there a few years ago, and you just don't realise how far away it is.
Yeah.
It isn't. I think like professionals, like they will. Perhaps some aren't as quick as others at picking this stuff up. Whether it is AI, whether it is outsourcing, and I suppose that's the exciting thing, isn't it? Because we can move quicker now. We can do so much more with less manpower and less costs. And it's having the I know I personally, I want to learn about it. I want to learn about how can I use it. It's almost as if the playing field has been leveled a little bit these last few years.
Yeah, one of my we did a Secret Santa in our office, and one of the younger kids got me a Chat GPT for Seniors magazine, so which was obviously a joke present, but it's not too bad actually.
But they've been dismissed now, haven't they?
Yeah.
I want to sort of like wrap up because I'm conscious of your time, and this is being recorded in silly season in January. What's the one message that you'd like every UK director to remember about money?
You're putting me on the spot with this one.
I'll give you the first one. I'm on this one.
I think the thing I say the most often is about the account system. If it's taking too long, if there's too much manual input, then there doesn't need to be. There's a quicker way of doing it. Because I think there'll be a lot of people like that whose accounting software system is giving them a headache, and I'm sure there will be a quicker way of doing it if you have got a big headache.
Finally, if anybody else wants to find out more about Matt Priest, if they want to find out about the firm you work with, if they want to contact you, if they want to get in touch, where do they find out more? And there'll be show notes to this show with all the relevant links, but for those that are listening.
Yeah, well, I think obviously you've come across me from LinkedIn, so I'm ever present on there. But on our website, there'll be details about the firm, and then I suppose I can put my email address in the show notes. Can I, Chris, for people to contact me?
We'll get in touch with you in the next couple of days.
Yeah, the website will obviously have all the firm's details, and they'll have my partner profile on there as well. I don't know if my email address will be on there. I don't think it is, to be honest.
I was on it earlier, actually. I should have told you. But we will have everything in the show notes. Matt, it's been really nice to talk to you. Thank you for your time.
Pleasure.
Yeah, once again, thanks for joining us on the Director First podcast.
No, great. Thanks for having me.